Dividend investors, bonjour, Mike Yahoo here. I'm here to help you invest with more conviction and retire happy. How were your holidays? On my side, I'll be honest, it was very quiet. I live in Quebec, and in Quebec we got curfewed, we got locked down, so we didn't see many people. But it was fresh and relaxing, and what better idea to start the year than to select the top stocks that should thrive and outperform the market for 2022, right? So every single year since 2012, I write this kind of like small booklet selecting great Canadian, great US stocks that should outperform their sector and the market at the same time. And this year I sent all my stock picks with some reviews to my DSR members back in November. And I've prepared a small booklets for you guys. Today we're going to look at two of my favorite US stocks. Next week's going to be Canadian, so don't worry about it. And you can also download, right the link below. There's an excerpt of our top 22 top stocks for 2022. This year I did something special. We're selecting one great US stocks, one great Canadian stocks, and one speculative one, a speculative play either in one sector, Canadian or US. So we have 33 stock picks for our members, and this small excerpt includes 6 of them. So now, without further ado, let's talk about the first one I want to talk about today is Air Product and Chemicals. The ticker is APD. APD rated pro rating at 4, dividend safety score at 4, so very well loved at DSR. It's been a while. What I like about this company is that it's a basic material sector. The company is selling industrial gas, mostly hydrogen. And the business has been increased its dividend since 1982. So we're talking about 39 years of consecutive increase. So yes, the yield is low, but definitely it's a great dividend grower. Actually, one thing that is amazing with this business is that since they're selling industrial gases, they're kind of like sheltered against inflation. Why? Because when cost of materials and commodities increase, they can just pass along this increase to their customers. Industrial gases like hydrogen, if you're doing business, you cannot skip them. You have to pay for them because they're not a huge cost doing business, but at the same time, it's a crucial part of any kind of facilities that require them. So for that reason, APD is a crucial partner with their client, and this is how they have strong pricing power on them. The company has been in business for the past 80 years, 20,000 employees. So we're not talking about a small company here. It's like huge one, operating in 50 countries, more than 30 industries served. So when you're thinking about something that is well diversified, well, you have it here. We're talking about 10 billions of sales in 2021. So huge business for Air Product. They work in gray hydrogen, blue hydrogen, and green hydrogen. So you can see that they've been using the classic proceeds at first, and now they're moving slowly but surely with massive investment. They have actually 18 billions in capex, so lots of new projects to generate hydrogens from either wind and solar energy, and they also have actually projects in Alberta, so which is kind of interesting. So we can see APD in action in our own country, which is great at the same time. In terms of geographic diversification, you can see that roughly 40% of their revenues are coming from North America. What I like about that is that they have a solid ground where they are based, but then they can get a lot of growth from emerging markets. We're thinking about 18% in China, the rest of Asia where it's 11%, and there's a lot of room to come with Latin America with only 4% of their revenue. So well diversified in terms of geography and also well diversified in terms of product offering. What I like here is that 50% of their business is linked with 15 to 20 years contract length. talks about stability. If you're worried about the market going to crash this year, well, this one is not going to let you down. They generate income every single year. As I mentioned, industrials are highly dependent on industrial gases. All those companies, they require this product to function, so they will not hesitate to sign a long-term contract, which provide a better stability, and it's easy to manage cash flow and to make those huge capex for APD going forward. What is interesting here, obviously, dividend history. The past, since 2014, we're talking about a 10% annualized growth rate, so double digit for this one. So on top of being a dividend aristocrat and well on their way to become a dividend king with 50 years of consecutive dividend increases, we're not talking about like slow growth here. It's like fast forward, very interesting for any growth investors. And when you look at the dividend triangle, you can clearly see that there's a strong trend for revenue and dividend. The earnings have been reaching some kind of like plateau since 2020. Obviously, the pandemic hit, and I expect earnings to go a little bit more sideways in the upcoming years because they invest massively. So you'll have deduction for amortization there that will hurt the earnings, but not necessarily their cash flow. And this is what's interesting. So some investors may be a little bit concerned about payout ratios at one point, but focus on cash flow generation, and then you'll see why this company has been able to go through so many recessions and keep their dividend growth policy intact. Now, before we move to my second pick of the top US dividend stocks for 2022, remember to go click below, download this excerpt. We're going to talk about utilities and REITs in this one. 3 stocks for each of them, so 6 stock picking ideas. And actually, one of them is part of this video, and it's called Innovative Industrial Properties. Kind of funny because with that kind of name, you may think, oh, it's an industrial REIT doing some like high-tech warehouse distribution or something, but it's definitely not that. They're actually quite innovative though. They held facilities where a licensed medical marijuana producer are using those facilities. So they do not operate them, and it's not for recreative purposes. It's all about medical marijuana or medical cannabis. So we're on the right side of the law here. It's a little bit easier for regulators, and as you can see, 100% lease for that REIT. It's a small one, recently new. The IPO happened in 2017, so you're not gonna have like a huge history around that, but it's growing fast. A lot of capex, a lot of growth by acquisition and new development. Basically, they are present everywhere where where regulators actually allow medical cannabis, which is a good thing because it's also a great growth vector for the future. As you can see, they still have a lot of states to cover. It is growing slowly but surely. More regulations is coming up, but at the same time, what is great is you will not be highly concentrated in one state. Pennsylvania is the highest one at 17.5% of revenue. So what I like here is that if you run into any state regulation changes, you should not have to worry too much for this one because they are well diversified, and I expect to be implemented in any states that allows to culture cannabis for medical purposes. A few numbers, what I really like, I told you the main strategy here for them, their business model is really to build up those high-tech facilities. Obviously, cannabis producers needs special facilities to be able to produce the cannabis. They have invested in 2021 1.7 billion, so you can expect revenue to continue to go up. Funds from operation goes up at the same time. Another thing that I like is the average lease. We're talking about 17 years on average for the contract, and most of them as escalators. So again, if you are worried about inflation, APD can pass along the increase to their clients, and innovative Industrial properties, IIPR, can do exactly the same thing through those escalator, those escalator leases. You can tell that those properties are quite popular, 100% portfolio leased, so that's pretty good. And while the dividend increased very fast, we're going to see that in a second, but you can see that they target a 75 to 85% AFFO payout ratio, leaving enough room for more growth and obviously for more dividend growth. So how does it translate in terms of dividend increase? Well, it's kind of crazy. They went from 15 cents a quarter per share in Q2 of 2017, sorry. And then they went up to $1.40 to Q2 in 2021. Now they're up at $1.50 for the latest quarter in Q4 2021. What explained that such a great growth? Well, cannabis sales are increasing like there's no tomorrow. There's more and more states that are accepting this, and it helps also to for many different diseases. So as more diseases are being added to the list, there will be more regulators approving it for many states, and then you're going to see a huge market booming over there. So this is why they're investing right now. They benefit from the fact that they're among the first and the largest cannabis REITs in the country, and this gives them a lot of first mover advantage. When you look at the dividend triangle, it's kind of crazy, right? Everything goes up. Obviously on this one, if you look at EPS, it's not really relevant, but the dividend growth is very impressive. The revenue growth is very impressive, and obviously I wish I had this one since 2017 because the price went up like there's no tomorrow. However, right now the price is down. At the beginning of the year, for the first 2-3 days of trading market, the stock was down another 10%, kind of creating a great moment here. So we can feel market is getting nervous. There's some profit taking, and it's probably your advantage. This is probably your opportunity to take a look at those two stocks that are not necessarily that overvalued right now, so which kind of could be interesting. Once again, keep in mind that those videos are not buy sell recommendation. You have to do your own due diligence, and I am not responsible if you're losing money on those trades. But personally, I'm looking at those two, and I'm trying to find a place in my portfolio for them. Right now, I haven't found one yet, but definitely I'm going to look a little bit further because there are two companies that should do well, not only for 2022, but for several years to come. So don't forget to like this video, subscribe to the channel to not miss next week's video about two of my favorite Canadian dividend stocks for 2022. And until then, stay invested.